Hi everyone, welcome to RHB Bank's podcast series. I'm Nova Lui, Head of Investors Advisory, RHB Bank. Today I will be sharing with everyone the fund discoveries idea for Q2 2022. Let's take a look at the industry fund flow in the first quarter of 2022. In the first quarter of 2022, main inflow in the market remains to be the Global Equity Fund, which almost doubled the second highest inflow fund, i.e. the Information Technology Equity Fund. Information technology is the highest single sector inflow in the industry. However, overall industry inflow into equity fund are lower than the amount we have seen in the last quarter of 2021. Another major inflow noticed in Q1 2022 is the Target Maturity Fund. These funds are usually capital protected, which offers clients certain protection on downside on the weakness in the equity market. Asia Pacific Equity and China Equity Funds are the second highest single country or single region inflow for the industry. Overall, main outflow in the industry are money market and bond-related funds. Potentially, some of the outflow in bond-related funds are reinvested into equity funds as part of the dollar cost averaging exercise. Gold rose for the second consecutive quarter in Q1 2022, ending 8% higher from the previous quarter. This is the best performing quarter since 2020. The outflow from these funds shows that investors are locking in its profit from recent market rally. Malaysia and ASEAN are the highest single country and single region equity fund outflow in the industry. Almost all major market tracks showed negative return in Q1 2022. Despite market bottom in mid-March 2022, which rebound after first US Fed rate hike. FTSE Bursa Malaysia KLCI Index ended the quarter with positive return of 2.87%. For year 2022, RHB continued to maintain overweight view in equity and alternative assets, neutral on fixed income, and underweight cash. A few key risks we need to watch out for includes stubbornly high inflation rate, US Fed interest rate hike, and ongoing Russian-Ukraine conflict. In Q2 2022, is potential for investors to buy the dip in the market. Most market has bottomed in mid-March, where most of the market negativity potentially has been priced in. Overall, government's monetary and fiscal policy remains accommodative. Despite rising interest rate environment, which is part of the interest rate normalizing path, we think the risk of stagflation in 2022 remains low. Nevertheless, we continue to suggest investors review his investment portfolio to ensure it is properly diversified with exposure in both equity and fixed income. In this quarterly fund discovery podcast, I will be showing a few new ideas which are potentially under-owned in clients' portfolio. For the full fund focus idea, please keep in touch with your relationship manager. Manulife India Equity Fund has high weightage in financial sector, suitable to capture opportunities in rising interest rate environment. It also has significant exposure in information technology sector, which offer it the exposure in growth sector. Despite inflationary pressure from rising global commodity price, India has been buying cheap Russian oil, and that may reduce some of the inflationary pressure spilling over globally. The sell down of this year provide investors with an opportunity to invest into India market at a cheaper entry point. This is a good diversification in clients' investment portfolio for exposure into emerging market equities. Another market that investors may look at to buy at dip is the global equity market. Analysts expect S&P 500 profit growth of about 9% for the year. Most of the market negativity has been likely priced in. In previous Fed hiking cycle, we have observed that MSCI World Equity Index trend up few months after the first interest rate hike in a particular Fed hiking cycle. Global liquidity remains ample and supportive for equity market. Job and wages growth substantiates the Fed tightening agenda. Lower NAV price due to January 2022 sell-off and March bottoming provides investors an opportunity to buy the dip. Investors who prefers conventional strategy may consider RHB GS US Equity Fund, while investors who opt for Sharia strategy may consider RHB Global Sharia Equity Index Fund instead. Another region that is highly underowned is Southeast Asia region. Investors who diversify in this region rides on the sustainable strength in commodity prices, for example palm oil, fossil fuel and nickel. Southeast Asia are traditional producers and exporters of raw materials and natural resources. Trade surplus in Indonesia and Malaysia are expected to maintain, underpinning higher government revenues and encouraging consumer spending. The onset of borders reopening is also set to benefit tourism-related countries such as Thailand. Singapore has also reopened its border to all qualified, fully vaccinated travelers effective 1st of April 2022. Malaysia is in its transition into endemic with its border reopening on 1st April 2022 and a lot of COVID-19 restrictions being uplifted. TIA Southeast Asia Fund is managed by Lion Global Investors Singapore. Despite the fund is up by almost 43% in the past 2 years, the fund is just close to its pre-COVID NAV level. My final sharing is on another sustainable and responsible investment fund on our platform, Manulife Global Aqua Fund. In line with RHB Sustainability Framework 2019, we continue to strive in adding more SRI-approved funds on our platform in building sustainable future. 5 key drivers for attractive growth in water-related industries includes urbanization and growing world population, new infrastructures and upgrades, water scarcity, rapidly growing water value chain, and technological innovation. This is all for today's podcast. Please view our other podcasts and Money Chat series from RHB Merge to get update on our latest market insight.